Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, overnight the Australian dollar decline accelerated after crushing the support level of 71.60, slammed into the support level of 70.90 and rebounded. However, from a technical point, still remains vulnerable to the downside. As we can see here, the market is attempting to reclaim the level around 71.80-90 area, but failed. In light of the pattern, I feel the market will probably challenge this level of 70.90, but whether or not it breaks on the second attempt is still a bit of a question mark, as most probably profit taking didn't quite get the chance of snapping up some of their short positions, so they may be sitting on the sidelines and waiting, and therefore may see some whipsaw price action again towards this level. The euro, as you can see, is wearing out the support level, which is seen around 112.90 to 113 the figure. All eyes turn to the policy seating Federal Open Market Committee, or the FOMC, which convenes its two-day monetary policy meeting on Tuesday. At its conclusion on Wednesday, market participants will be passing its concluding statement and also the US Fed Chairman Jerome Powell's subsequent question and answer session for clues as to when the central bank's timeline for hiking interest rates to combat inflation. Most market participants are now looking that the Fed may signal a rate rise as soon as March. Therefore, could see a little bit more strength to the US dollar. Now, looking at the US dollar, which measures the greenback strength against a basket of six major currencies, and the euro weighted at 57.6, rallied up towards the highs around 95.80 overnight and currently holds there. Now, I do feel that the price action for the euro will eventually take out the support seen at 112.90 and eventually head lower to the region of 112.2025. And then looking at the broader picture, which I do sound like a little bit of a broken record, but still looking at 111 figure 50 and reassess from there. Any upside attempts in the short term should still find resistance around 113.65 to about 114.20. The dollar yen's break to the upside failed to show any follow-on and still somewhat remains in a lackluster price action in terms of a bull case. Looking at the pattern, the RSI still remains somewhat negative and therefore could see another down test in the short term, more to the fact of seeing a slightly stronger yen that could push the prices towards 113.60 to 112.70.80 before turning around. However, keep an eye on this pattern, because if we do get a rejection from the support line seen around 113.60, could initiate the next move to the upside, which I feel eventually will occur and look towards 115 as a short-term target. But we do need a little bit more confirmation from the technicals. With a little bit of divergence here to the bull case, does give some hope that for the bull case to rally on to that 115 level, but let's see how we go into the European session and we'll see whether or not we get a break or rejection from this trend line. The pound is still surprisingly somewhat negative as it plummets and hits the region around 134.40. In light of the pattern, it's still somewhat negative but extremely oversold. Looking at the support level, which comes in around 134.65 to 134.10, is where I feel the market will eventually finally turn around and show some exhaustion and therefore look back towards that resistant area, seen around 135.20 to 135.70. The whipsaw price action for CAD yen hit the downside target surprisingly at 89.60.80, where I outlined here, and still has a little bit more room to the downside, especially if yen is a little bit weaker. But it really depends if the yen can close under 113.60, because the legs for CAD yen would see further strength from the yen and push back towards this bottom side of the range. But I still feel there's a little bit more profit taking coming back into play, so 89.60 may hold in the short term. The lackluster price action for gold continues as market participants sit on the sideline and await for the US Federal Reserve's meeting, while still keeping an eye on the Russian-Ukraine tension. Nevertheless, We haven't closed above the level of 1,842 as of yet. And if this is at flag, well, it needs to break tonight. If it doesn't, then I'd say the market will probably drop back down towards 1,831 to 1,824, with a broader picture still to around that 1,800. However, if we close above 42 in the short term, would leave me neutral. A bit of a whipsaw price action for oil as well. As we can see here, the market is a little bit heavier and respects the boundaries or the parameters of 80.80, with the top side holding around 87. I'm still going to sit with a slightly neutral bias, but I would say that given that the technicals have broken down, that we could see another down challenge back towards that 80.80 level in terms, let's see if the market can hold there or reject. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.